Good afternoon, everybody, and welcome back to the Stockcharts TV studio here in Redmond, Washington. I am your host for this week's show. My name is Grayson, Roze, Chief Strategist at Stockcharts.com. As always, you know it, I'm delighted to be with you guys. Especially today, I am joined by my good friend, someone that I have personally mentored and inspired for many, many years, Mr. David Keller. You know him, you love him, across the desk.
Good
How
to
are
see
you,
you, Grayson? I'm good.
Thank you for coming in today. I like how you've got the green, I've got the red. We're covering all markets here.
We are, right?
This is good.
I don't know if this is going to match our market outlooks. We'll see.
Yeah, we'll see. We'll
Okay.
see. So today, as you know, we're doing top 10 charts to watch for whatever month is coming up after April.
Yes.
This environment is just so crazy. I don't even know what year it is anymore.
Yeah.
It's madness. But we're going to have some fun. Before we do that, though, we're going to go back and forth, picking our 5 names just like we've done in the past. We got to touch on this market, though, because we did this last month, right? Crazy environment that we had.
Yeah.
Now we've seen everything totally reverse to the upside since we did that last show. So I want to get your thoughts on the environment that we're picking these names in. That is the important thing. We did this a couple of weeks ago. We had Julius DeCampanor in the studio, and we sat down and we said, you know what? There's a crazy market on our hands right now. Let's talk about some pain points for this market, but also some bright spots for this market. So
yeah, sure.
I want to do the same thing today, get sort of one pain point about this market from you, but also one bright spot, and I'll do the same.
Okay.
Take it away. What's your pain point for this market?
Just one.
Well,
We'll
yeah,
try.
just one. It'll be a little hard. But.
I mean, it's a challenging environment, right?
Yeah.
And in the course of what I do, I talk with a lot of really smart investors, I feel like, and I think I'd be lying if I said there was a real clear sense of what's happening because the financial markets, it's all about projecting what's going to happen down the road.
Yeah.
And whether you're trying to value companies and using like a, DCF model, that's been completely blown up because part of that is just figuring out a trajectory that's really hard to chart right now.
It's true.
So I think it's a challenging environment for everybody. So,
Yeah.
I mean, one pain point, excessive volatility has to be it. I mean, you mentioned just since we've done this last, the market's cratered into an April low after, headline risk exploded in our faces, but then immediately V-bottom and rallies back higher.
Yeah.
So I feel like day to day, the VIX being so elevated, the VIX being above 20, at times over 30, even 40, what that means is the market is pricing in big percentage swings. So the average day is going to have 2-3% moves, not 0.5% moves. And so the problem is, regardless of what your sort of market outlook is, on one day you will feel very vindicated that a big up day means you were right, and then the immediate next day it's a big down day. So I think it's really harder than ever to take a step back, to take a deep breath, and really reflect on the overall trend.
Yeah.
So I think volatility provides opportunity, which is probably a good thing, but it also provides a lot of uncertainty and a lot of challenges to really stay true to trend following, which is what tends to work over time. So biggest pain point, I would say, volatility being excessive right now with no real end in sight to that.
I mean, we're even seeing that from companies that are reporting earnings that are saying,
100%.
we don't know what's happening, and so we're not even going to give you forward guidance.
And we're seeing companies not update their guidance. They're basically just unwinding it and saying that we can't really give you an idea of where a company's going to be.
Or the two paths. We've even seen some companies say, maybe this or maybe this in a different world.
I don't feel like that's helpful at the moment. So
yeah.
It's
okay.
tough. What about you?
I want to get your bright spot first, and then we'll jump back over to my pain point, my bright spot. What's your bright spot in this market? There's got to be something, right?
Yeah, so bright spot for me, I would say, is that it's not hard to find good charts. And given the fact that volatility is excessive, at least a couple of the names that I'm going to show, they're just good charts. And working with people like Peter Lynch back in the day, their point was it doesn't matter what the macro environment is.
Yeah.
I always wrap my show by saying it's always a good time to own good charts. There are good charts out there, and if you use the scanning tools on Stockcharts, it's not hard to find things where the price is trending higher and the moving averages are doing what you want. The relative strength is improving. The momentum is strong but not excessive. So sort of like the classic, strong trends that you want to follow, they're out there. It's just not in names that you'd probably would readily come up, at the top of your head.
Staples, more defensive.
Yeah, it's more defensive stuff, but there are names out there that are working. So I would say there are good charts out there. It's just you have to search for them a little bit. Compared to like last year where your cup runneth over with good charts.
Right.
This is not that environment, but they're out there. So I think that's a bright spot here.
We touched on that the last time that we did this show. We said, the crazy thing about doing a show like this where you're picking stocks in a market like we had a month ago is that it almost becomes easier because instead of your scans returning 100 names, they're returning 4. So it's like, oh, well, there's the 4 names that I want to watch. They're right there.
Yeah.
No, that makes sense. My pain point, my bright spot, they're kind of one and the same, actually.
Okay.
So we're going to jump over to stock charts. We're going to put up on the screen our new market summary page. This is something that we released just a couple of weeks ago. Really good reviews on this thing so far. I'm using this in my process. I think you said you were as well.
Yep.
This page has been a huge, huge game changer, especially for the market that we have right now. Yeah. Kind of everything that you need to understand every corner of the market is on this page, really and truly. If we scroll down here, though, we've got a really special little breadth panel, little breadth widget here. 2 tabs in there, advancing and declining issues on the day. But the one that I want to turn our attention to is the moving averages panel. So what this is going to show us is for these indexes, kind of the classic indexes that we like to follow to think about the U.S. stock market, what are the percentage of stocks within each of those indexes that are trading above their 20-day, above their 50-day, above their 100-day, above their 200-day? Classic measure of breadth, right? Sure. We can also see this on the chart. We can do that later. This in one little snapshot, though, one little visual, this is my bright spot and my pain point. The bright spot is you got a lot of stocks that are above their own 20-day moving average right now. We've seen a big bounce. We've seen a big recovery. And so in the short term, if we're kind of thinking tactically in the short term, we do have this little bit of a breadth recovery. You got to start somewhere. We're seeing it. Yep. We've got a lot of stocks that are trading above their own 20-day. We do not have a lot of stocks that are trading above their own 50, 100, or 200-day. So this map is sort of very, very bifurcated right now, if you want to think about it that way. It looks great on the left. It looks terrible on the right. So that's my pain point and my bright spot in one map. Yep. Pain point, breadth is not strong enough yet. Bright spot, it's starting to get there.
Yeah.
We got to start somewhere.
And what's so funny, the breadth is so strong on that short-term time frame, which tells you pretty much everything's bounced off of like an April low.
Yeah.
But if you look at a lot of key charts, we've got some Magnificent Seven names reporting earnings today and tomorrow. None of those are above their 200-day moving average right now. And I think that's a noticeable gap between where I think people's expectations are. A lot of people's expectations are tied to that short-term recovery.
Yeah.
The long-term trends are still kind of negative for a lot of those charts. Right? It takes more to really reverse that downtrend.
I'm not going to feel better until this green column moves one over to the right. And we see a lot of stuff above their own 50-day. That's going to start to get me more excited.
That would help. Yeah.
But speaking of getting excited, let's jump into our picks, charts that we are watching, names that we are following for the month of May. You are going to kick us off with your first pick. Take it away.
So based on what we said earlier, you may not be surprised to learn it's in the consumer staples sector.
Okay, I kind of saw that coming.
This is the one name that I'm carrying over from last month. And I'll be honest, I looked at the names I shared last month.
Yeah.
They're not bad. I wouldn't be that disappointed holding that basket still because they've kind of worked okay.
Yeah.
But Kroger is one of those charts that just sort of is consistently working. When I talk about the good news about this market is there are charts out there that are still in constructive trends that still look good. Kroger is kind of the chart that I have in the back of my mind.
Yeah.
Price is trending higher. We're close to making another new all-time high this week. We're above the 50-day and the 200-day, so we say the moving averages are in the proper order. So one of my favorite scans to run, one of the sample scans on stock charts now is that moving averages in the correct order. I love that scan because it surfaces names like this that are bucking the broader market trend and are just strong. The relative performance has been consistently good. It's had these nice little tactical pullbacks, but overall it's pretty consistent. The other thing I would say from a macro perspective with consumer staples like this, I interviewed Sam Stovall, who you probably know, right? One of the great visualizations on Stockcharts, that idealized sector rotation that Sam worked up.
Love that thing.
He shared a quote that I think is attributed to Alan Shaw, one of the great technical analysts back in the day. He ran the Smith Barney team. He said, when the going gets tough, the tough get eating, smoking, and drinking. And if you're thinking about those types of charts, it's grocery stores, it's tobacco names, it's beverages. Yeah. These are charts that are kind of still working, and it speaks to how investors are getting more defensive. Consumers are sticking with what they need, not with what they want. Yeah. I think Kroger kind of checks all the boxes of a constructive chart in an area of the market that probably does well in a period of market uncertainty. Yeah. I think it's still a good bet here.
Yeah. I just pulled up a longer-term 5-year weekly on Kroger. I think the average person out there would be shocked to know that Kroger has outperformed the total market over the last 5 years. Given the bull run that we've seen over the last 5 years, what stocks have done, Kroger's outperformed? That is wild.
Yeah.
And the chart still looks fantastic. Trending higher, everything in the right direction. That's a good pick. That's definitely one to keep watching.
We'll take it. You're first. Where are we going?
My first is going to be kind of somewhat similar. I'd put this in a similar bucket. It's going to be Costco. Now, I find Costco really interesting for a number of reasons. First and foremost, technically, this chart is beautiful. Outperforming the market. We can see that up at the top with that relative strength panel. Heavily outperforming the market. I like to see that relative strength. This is a name that's held up relatively well. You know, it did take quite a hit. Let's see, we can measure this actually. Took about a 20% hit, so kind of followed the market, but has recovered nicely and is now, again, trying to make this breakout. I like to buy things that are moving higher, that are outperforming the market, that are making a breakout. This is doing that. It's chopping around, it's traded sideways, but it's moving higher, trading above some key moving averages and trying to make a breakout. I find Costco really interesting right now, technically. I also find Costco really interesting just kind of if we step back and we think about what's happening in the markets, right? It kind of is a defensive play. It's also more of a consumer discretionary play because I don't know if you've ever been to a Costco, but you walk in there and you suddenly leave with golf clubs that you didn't need.
It's not just groceries.
So it's kind of everything, right? And then if we think about kind of the tariff conversation too, I mean, they're selling staples, but they're also selling some of those discretionary. There's so much that's bundled into that Costco story right now. Yeah. And I do just kind of find it fascinating. I think they're a little more insulated than some of the other retailers, but also still, well positioned should some of those tariffs come off and we see, shoppers return to buy things that they don't need, like you said. Yeah. So a bunch of reasons why I think Costco is a really interesting one to watch right now. Now, we're going to see this. I want to touch on this really quick. On a couple of the names that I've picked here today, what you're going to see are these different lines, these horizontal lines. So I have this actually built into my chart styles, built into my chart templates. We talked about this a little bit on the show last time. These are horizontal lines that I have built in down here as indicator panels, and they allow me to basically plan a trade really easily. So you can see I have these green, red, orange, blue, and gray lines that are just built into all of my chart templates. So when I find something like Costco that I actually think is interesting as a potential trade, I can use those to kind of mark up different levels. So in this case, the other thing that I like about this Costco chart, that would be sort of my ideal level, that lower green line, which is kind of right above 1,000. I can then measure this down. I like to use about a 10% stop. So you can see that I put that red line at about a 10% stop. That gives me some meaty price action, also gets me below the 200-day. So there's kind of a lot to work through there for Costco. Yeah. So there's plenty of room for the stock to keep bouncing around. And then what I also like is that I've got another green line a little bit higher up. So if I do take that initial position and the stock continues to work, I've got another potential entry to kind of ladder into this thing over time if it can also take out those all-time highs a little bit higher. Yeah. So you'll see those. We'll talk through a couple of those different lines. But that would be sort of the trade that I'm planning out here on Costco. Got to get above that green line. You got another entry potentially up at all-time highs. But you've also got some meaty price action to work through there. You've got some room for Costco to work.
It's a really good story. This was a name we've brought up before. I mean, in years past about this because it's been just a consistent winner.
What a trender.
What's interesting is on assuming like your exit strategy with the red line there, if we would break below there, that would mean breaking the 200-day, breaking a bunch of support levels, completing a head and shoulders topping pattern is kind of what that would look like. So I think that's a good way of using technical analysis, using the chart, and using just sort of a general risk assessment, 8 to 10%, pretty good. Yeah. It all sort of lines up as a confluence of support, and sort of like as long as we remain above there, it's not a bad trade. Yeah. We break below, you cut and run.
We'll see this at the end of the show with a couple of my sort of more risky plays that I'm kind of keeping an eye on. Yeah. You'll also see why these horizontal lines can be really helpful. But yeah, again, planning out your trade like that, absolutely crucial. These horizontal lines are kind of my method for doing that right on the charts.
I love that approach. That's a good one.
Number 2 for you.
Chart number 2. This is my last consumer staple stock, but I am going.
Yeah, you said that before. I've heard that.
And it's been, I mean, honestly, that's where the charts are, right? And I think it's so fun. I mean, as an aside, right? I mean, to digress, what I love about running scans like, moving averages in the proper order, just running the scans, not necessarily for ideas, but just seeing what sectors come up. Yeah. And if you run it, you'll find certain sectors are proliferating in those scans right now. I think that tells you a little bit about the macro environment. I'm finding a lot of staples in there right now. Yep. So Coca's number 2. So first thing off, I'll say I'm looking at the unadjusted data. 2 quick ways you can do that on stock charts. You put an underscore before the ticker, or there's an easy little selection you make below the chart. And depending on the name, if it's a higher yielding name, something like this in a more value-oriented sector, a lot of times I'll look at both just to sort of think about that, what that means, because that tells you the impact of the dividends on the returns over time.
Yep.
So if we just look at the unadjusted data, you can see this is setting up as sort of a cup and handle type of pattern, which is a classic pattern William O'Neill really popularized, which is you have a run higher, you have this big rounded bottoming pattern where then we retest that left resistance level. Then we have a shallower pullback. Now this isn't a perfect one. This is almost a cup and handle. So so it's not ideal.
Two handles.
But I think the idea is pretty good, which is you have this resistance around like 73 to 74. We've hit that a number of times. In the last couple of weeks, we've now pulled back to the 50-day moving average and maybe pushing back higher, which I think is an interesting setup. It's an earnings name this week, and so I think the challenge with any of these charts, particularly a setup like this going into earnings, I'm happy kind of waiting. I think some people maybe try to anticipate earnings and get in early in case it works. I'm a little more conservative with that. I would rather patiently wait for the chart to tell me it deserves a place in the portfolio. So for me, getting above 73, really 74, which is where I have an alert set, that would tell me there's enough of a follow through to move higher. So I think the setup is pretty good. Again, it's in a defensive area of the market. Goes back to the quote. This would be things people are eating, drinking, and smoking. This is sort of in that bucket as well. It's interesting right now, by the way, if you look at Coke versus Pepsi, Pepsi year to date remarkably weak.
Really?
Coke year to date remarkably strong. Yeah. So if you look at the chart of Pepsi, it's sort of doing the opposite. It's sort of rotating lower. And a couple reasons for that. Coke is more of a global brand, so it's benefiting from outperformance of the U.S. The dollar weakness is kind of helping them. And less impacted probably by the tariffs potentially because they've got a lot of business outside the U.S. that is going to be okay.
Yeah.
But the chart is actually pretty good. If there's anything that concerns me, again, it's waiting patiently for a breakout. And the fact that the momentum has lightened up here, so February through April, you're getting a bit of a bearish divergence. That basically tells me wait and see. And if the chart breaks out, that would be the signal to come higher. So for me, I'm waiting on this one, but I think a break above 74 unlocks, probably further highs and a name that's actually done quite well year to date.
Yeah. I don't know this for sure. If I'd known that you were going to pick KO, I probably would have done some research. But I feel like their portfolio of brands is probably a little more diversified.
That's another one too, right? So Pepsi, it's pretty much Pepsi and some other things, but they also have things like snack foods and other things. So Pepsi's brands actually are probably going to be hit with tariffs, and also people eating healthier. It's a lot of junk food kind of brands in there. Whereas Coke is a little more broad into some healthier things as well. The brand sort of segmentation probably benefiting Coke here.
Yeah, that's an interesting one. I mean, draw horizontal lines across the chart. I'm going to love this one. That's a great setup.
Right? Not bad. We'll see.
Easy breakout. All right, number 2 for me is going to be HIG. Now, this is kind of a similar chart to what we saw with Costco. It's a little bit closer to those highs, though. So I do still have 2 of my my beloved green lines here on this chart. But all of you keep mentioning the moving averages in the right order. For me, I like to use kind of the classic mix of the 20 to 50 and the 200. The one that I sprinkle in there as well is this orange line, which is the 100-day moving average. When I see all 4 of those in the right order, the 20 above the 50, above the 100, above the 200, and the thing is breaking out, that is kind of the dream setup for me. We have that right now. So we have a name that is outperforming the market, broadly speaking. We have a name that is continuing to trend higher, has been consolidating within that uptrend for a couple of months, did get hit along with the rest of the market, but has now made its way back up to those highs, and once again is threatening a breakout. Now, the interesting thing about HIG to me is that I'm sort of going back to something from last month. Last month, I picked an ETF. That was IAK, which was the insurance ETF.
That's right.
With everything that was happening last month, one of the few groups that was really holding up well, kind of across the board, lots and lots of insurance names were holding up really well. So I picked IAK. Now, after we recorded that special, the market really dipped, and insurance stocks really got hit. So you can see that. I mean, some big ugly candles here for HIG. That kind of split the insurance group, the way that I've kind of dug into it. Some of those names really haven't made their way back up to those highs, but others have. HIG is one of those. So I'm kind of going back to that insurance theme from last month, but this time with an individual stock. I mean, just a thing of beauty. Just a great chart right now that is making its way higher, sort of bucking the trend of the market. You know, you got a lot of people concerned about this market, and this is a stock that's making its way up to new highs.
Yeah.
That's the type of thing I look for.
No, it's a really good one. Last month, you had the insurance ETF. I had Progressive, PGR, same group,
exactly.
and that was one of the groups we agreed on, or both kind of came up with. And I think both the idea of that still holds true. What I love about the technical setup in that group, these are, I mean, most of those names maybe briefly dip below the 200-day, like HIG, but recovered it very quickly.
Yeah.
PGR, same thing, above the upward sloping 200-day. So again, compared to some of the leading growth names that are nowhere above their 200-day moving average, these are names that are holding it. The other thing about Hartford is that when you look at the drop in April, a lot of stocks felt like they fell off a cliff, and it was like, where are these going to find a low? This actually stabilized right at previous lows, right? If you look left on the chart, kind of pay attention to support, and you held in there okay. So I think the way that recovered off the 200-day and held support is pretty encouraging. And now here we are testing new highs again. So
yeah, this one just came
still
back
a good
into a range.
Yep.
And actually, I mean, if you wanted to draw a trend line kind of off of these lows, it actually put in a higher low. If you think about that hit and you sort of draw it off of there, right? It actually kind of held that uptrend and now bounced. Yeah, really nice. And again, for me, so I'm drawing these stops. You can see that's about a 10% stop loss. So once again, I've got some meaty price action to work with. That puts me below all of these moving averages, including the 200. Puts me back down to those lows. So you know, if we were to play this on that lower green line, again, you've got kind of another potential entry there, a little bit higher. But if you were to play that with that green line, you've got some room for this thing to continue to chop around a little bit while you watch it, but hopefully rides those moving averages higher, continues the breakout, makes its way up.
It's a good chart. Well, I'm encouraged by the fact that both of us are finding some decent charts here. So right, they're out there.
Not that bad.
All right, my third choice is actually in the same sector. We're in the financial sector.
Okay.
This is Visa. Visa is an interesting one, and again, what makes me nervous about Coke and Visa, they're both earnings names this week, and earnings season scares me a little bit, only because the general trend in this earnings season so far, and we're kind of in the meat of it right now, has been beating the quarterly results. So companies are beating their estimates, but their forward-looking guidance is either being dialed down or it's just been removed. And unfortunately, that's what the market's trading about, right? You're pricing in the future earnings growth, not what happened last quarter.
Yeah.
So I think that is a bit of a concern. So, you know, with something like Visa, it's trading, you know, sort of chopping around here, but I think the good outcome for names like this is they continue to follow through. What I like about the chart of Visa, it's had a really good run higher, similar to HIG when we had the sell-off in early April. It actually held the 200-day beautifully. And I feel like just making a basket of stocks of names that held an ascending 200-day moving average during that period are probably pretty good names to look at. Visa is one of them. If you look at a trend line from the major highs, right, the late February, early March peak, the late March peak, we're just breaking above that trend line this week. We're also breaking above the 50-day moving average, which is clearing that initial rally off of the April low. Visa is an interesting one. I mean, I think, you know, my concern with tariffs is it makes things more expensive. I think people probably more lean into credit cards and probably build up more debt than they would probably do in sunnier times. That means the Visas of the world are going to be pricing a lot of payments, and I think that probably boost things to the upside. So the bull case for me, I mean, in the short term, breaking above trend lines, breaking above the 50-day is good. I don't have the Grayson Roze ideal lines on my chart, although it's on my list to do it. 350, which would get us above that March peak, I think would be a really good potential entry point sort of following through there. But I like how it's held. I like how it's looking sort of like a bull flag pattern that's resolving to the upside. And this is a name that did remarkably well, you know, in the last 6 to 8 months. It's outperformed pretty consistently. Even with the chop that we've seen in April, it's not really underperforming during that period, and I think that's something you probably want to bet on continuing.
Yeah. You know, I'm pulling up as we're talking MasterCard and also American Express.
Yep.
American Express actually, on a relative basis over a longer period of time, is the strongest. I would say technically right now looks the weakest. MasterCard looks pretty good as well.
Yep.
But the fact that all three of those are outperforming the market, broadly speaking, I mean, you got group strength with that too. It's such an interesting little cohort of those three: Visa, MasterCard, American Express.
Yeah.
Think about the importance of those businesses and the fact that there's only three. We're not going to get off on that tangent, but pretty interesting, and especially being able to watch those other three, right?
For sure.
MasterCard's another interesting one. Visa's a good pick. Visa's a good pick to watch right now.
Two good charts.
Yeah, it's so interesting when you have a theme like that, right? That's everything that's happening in the markets with spending and tariffs and all that stuff could be bad for Visa if we see, spending pull back, but also could be great for Visa if we see higher prices for everything and they're charging fees on all that. So, God, it's such an interesting theme.
Mm-hmm.
The puzzle of the markets. It never stops. All right, my third pick.
Yeah.
TDG. I'm doing it again.
Ooh,
I'm
aerospace.
going back to my theme from last month. So last month I picked, I think it was ITA, which was the
ETF.
Yeah, with the ETF for the whole group for aerospace and everything. This is an individual name, an aerospace company, TDG. Again, a very similar setup. You'll notice that a lot of these setups are the same for me. Outperforming the market. This is really beautiful relative strength too. I really, really like the way that this is not just hitting new highs on sort of a price basis, but also hitting new highs on a relative basis and moving higher. Really, really a thing of beauty there at the top of this chart. Again, you got all of these moving averages in the right order. You're seeing this thing chop around. Again, we did see, just like with some of those other names, we saw about a 16% hit to this. So pulled back less than the market. Did pull back under, quite a ways under some of those key moving averages. That said, it really just sort of pulled back into this sideways range that we're seeing within this broader uptrend. So not really too concerned about that, since it was kind of just pulling back to a little bit below prior resistance. But has recovered now, since the market sold off, has recovered almost all the way back up to those highs. A really, really attractive chart to me right now. Again, you got some meaty price action to work with. You're trading above those moving averages. I do kind of want to see this thing chop around these highs a little bit more, especially because it has put in such a consistent run. Almost, what is this, like 6, 7, 8 days, moving to the upside in a row. We're finally seeing a down day today, right below that breakout level. So I do want to see this thing chop around a little bit more. The other thing that catches my eye on this chart, though, I'm not a big volume guy.
Yeah.
You're not a big volume guy.
I'm not.
But I gotta highlight the volume on this right now. I think this market environment is the type of environment where I do become a little bit more interested in volume.
Yeah.
So right here, for instance, you've seen TDG, like we said, move multiple days in a row. It's moving to the upside. It's threatening to make that breakout. It's recovering, relative strength. Everything looks great. But when I look down at the bottom of this chart, I've got the volume bars on there, and I've got a long-term 200-day moving average on volume. So that horizontal line that you're seeing at the bottom of the chart, that is a moving average on the volume bars. This is making that move higher on decreasing
Weaker
volume.
Yeah.
I don't like to see that, right? This is a market where we've got a lot of people that are freaked out. We've got elevated VIX. We've got so much uncertainty.
Yeah.
So when I do see a name like this, that everything looks great on this chart, except buyers apparently just aren't really showing up to send it to new highs, that does actually start to concern me.
Yeah.
So again, normal market environment. I'm not the biggest volume guy in the world. I think the game has kind of changed. We've talked about that. Just so much more sort of off-market activity on that's kind of manipulating volume and things like that.
Yeah.
But right now, the fact that you're seeing this really, really low volume, and it's not just low, it's decreasing every day that this is moving higher.
Yeah.
That's the one thing that concerns me. That's really interesting right now.
The volume overall has not been great, and this isn't the only name showing that kind of kind of pattern. And the volume going into April really strong on the way down, kind of lighter on the way up, and some big distribution days for things like the S&P on the way up too.
Yeah.
It's interesting. TransDigm's a really interesting chart, and the ETF, I remember last month remembering how good that looked. It's interesting, within that same group, you have some laggards like General Dynamics has been beaten down, Boeing even, and both of those are actually testing resistance.
Yeah.
So you have some of these names that have actually done much better, close to breaking out.
Yeah.
You have some of the other names in the group that are, probably weaker charts, but right at the point where they start showing up on my scans of new 3-month highs.
So starting to bounce.
I've been noting some of those, and it's not quite there, but maybe soon. We'll see.
Yeah.
See if that group continues.
It's an interesting group, definitely one to watch. I think an individual name like this, but the group as a whole.
Yeah. Good
so
team.
even go back to that ITA ETF.
Yeah.
Playing
the whole
about
space.
a couple acronyms there. Go back and take a look at ITA. That's another one that actually is still kind of back up to those highs and looking pretty interesting right now.
I like that pick. That's a good one. And I'm ashamed I didn't pick something like that. I'm glad you did. I always appreciate when we come to some complementary nature to what we did. All right, so the fourth pick for me, and I'm realizing now I didn't really think in terms of sectors, but I had 2 consumer staples names, and now I have 2 financial names.
There you go.
Because the fourth one is CME.
You're consistent. I like that.
I guess, right? So CME, just a good chart. And this goes back to our mutual friend and a frequent stock charts contributor, Jay Woods, who's often shared some insights from the floor of the NYSE. He and I talked about exchanges the last time that I interviewed him. And we talked about CME, we talked about ICE. A lot of these charts look really good. And what you have to remember is when you have a period of market uncertainty, when you have a period of excess volatility, certain companies are really going to benefit from the fact that a lot of investors are getting nervous and are tending to overtrade.
Yeah.
And the CME Group is one of those places that's going to benefit from it, right? So brokers, exchanges, it's going to be a big thing. What you also have to remember is the CME Group and other exchanges at this point are in the data business. They're not in the trading volume business as much. Although that's certainly part of it. So data and a lot of institutions trying to get their head around what's happening. They're consuming more data than ever. Feeding AI models and other things are all taking a ton of data, and it's CME Group and others that benefit greatly from that.
Yeah.
The long-term trend on this chart is what's most important to me. The relative strength year to date, it's been a consistent outperformer. We have the moving averages in the proper order. We're above 2 upward sloping moving averages at this point. The weekly chart just shows me this nice, consistent uptrend that I really am appreciating. So you think about from 2023 to 2024, the broad market in a primary uptrend, 2025 looking very different. The chart of CME does not look different. It looks like the uptrend has just continued with a hiccup in April, but overall the trend is fairly consistent. So I think this is an area of the market, if you're trying to play higher volatility and uncertainty, one way to benefit or one way to play that is to look for companies that are going to benefit from that continuing. And I don't see volatility coming down a lot. I think it's going to be more elevated. And every headline that makes people panic, CME of the world is going to probably benefit from that.
Yeah.
So strong chart, and again, having a really good 2025. I think there's reason for that to continue.
Yeah. Some of those businesses have really, morphed. S&P, NASDAQ, CME. I mean, so many of those businesses have really morphed into something beyond just being an exchange.
For sure.
SIBO is another one that kind of catches my eye right now. That's actually one that I own. But some of those names have really held up a lot better. And CME is just trending. Yeah. I mean, that's just a steady trend. Look at the 50-day on that thing. It's just trending.
Trending higher.
God, that's a good name.
Yep.
Sometimes you really do have to just kind of hold your name and hold your nose and own those names, right? You just got to say, this thing is moving higher. Clearly, people want it to keep going higher.
100%. And I did a presentation earlier today for the Money Show and a longtime Stockcharts partner. And when I talked to them, one of the things we talked about was selling early and how painful it is to sell something when it's up 20 or 30% and then sit there on the sidelines as it continues to trend higher, another 50, 100%.
Yeah.
And one of the ways you avoid that is if something's working, you go into trend following mode and just lock in the game, just continue to follow the trend higher.
Right.
So the chart of CME tells me it still deserves a place in the portfolio. I'll wait for the chart to tell me that that's not true, but as of today, it's still strong. Yeah. Right.
It's such a good opportunity, too, to talk about just going back to basics. I mean, this is where every time we talk about moving averages, the moving averages are in the right order. A lot of people go, moving averages, that's the simple stuff. I learned about that in TA 101. But it really is an amazing tool for following a name like this. If the moving averages are in the right order, if it's trading above those moving averages, add to it when you're bouncing off a couple of those moving averages. Moving averages are a great tool.
They still work.
They still work. Who knew?
All right, your fourth pick.
All right, my fourth pick. I got to start with something that's not my fourth pick before I talk about my fourth pick. So I'm going to pull up a long-term chart. This is, I believe it's a 7.5-year chart of SFM. This is Sprouts Farmers Market.
Sure.
What I want to talk about here is this clear breakout, okay? moved sideways for a long period of time. This is like the classic Weinstein chart, right?
Yeah.
We moved sideways in this stage 1 base. We broke out, and we have made this huge move. I mean, look how big this thing was. This is a 500% almost move to the upside here for SFM in not that long. I mean, this is just a couple of years. So a beautiful long-term chart here on SFM, right? Now, a little bit stapley, also a little bit growthy though. I mean, this is almost a $17 billion farmers market grocery store, kind of like a Kroger, but more like a Whole Foods, I guess.
Yeah.
Early Whole Foods. This chart is kind of burned in my brain because I actually missed this breakout earlier back in 2022. So I came across a name as I was running my scans and all that stuff, prepping for the show. NGVC. Don't know a lot about the company, don't hear a lot about the company, but the first thing that popped into my brain when I saw this thing come across the scans, shows up, outperforming the market, everything kind of trending in the right direction, I went, natural grocers, I wonder if this is a little bit like Sprouts Farmers Market.
Yep.
So I pulled this thing up, and if we go back again to a long-term, let's go back to that 7.5-year weekly chart. I mean, a similar kind of thing, right? You're basing for a while, you've made this breakout. Now we're about a year into this big run to the upside here for natural grocers. So the thing that I'm kind of wondering as I watch this chart, which looks great on the daily, we'll talk about that in just a moment. But the thing that kind of catches my eye is, what if this is in its sort of beginning phase of a Sprouts Farmers Market kind of thing, right? This is a small company. This is a $1 billion company, 1.1. So not super, super small, but fairly small relative to some of these other grocers that we're talking about. But something that definitely catches my eye. So if we go back now to that daily chart, great chart. I mean, just heavily outperforming the market. You can see this just totally unbroken. Moving back up to new highs, moving averages in the right order. Everything is trending up just the way that we've been talking about it. We're seeing, not huge volume, but not below average volume on this name too. Some of those up days are seeing, nice above average volume. So I love to see that, and just trending beautifully, trending in the right direction. Now, this is where I want to come back to these horizontal lines, because again, we talked about sort of some of my process. I like about a 10% stop. That's kind of typically what I like to shoot for. The benefit of having these lines on this chart and actually marking up your charts with your stop, again, planning out your trade, I can see how much more volatile this is than some of those other names that I was just talking about, because that red line is pretty dang close to that green line. So if we measure this thing down, a 10% move, I've been talking about, meaty price action. That barely gets me below the 20-day moving average. A 10% move in this thing is not a lot of room to work. So I am a little bit hesitant for to trade a name like this, just because I like more price action for buyers and sellers to work through.
Yeah.
To me, this is not quite enough. Now, if you got the stones to make this happen and you want to really play that whole move, I mean, a 30% stop loss, pretty aggressive, but that does get you this entire range within that broader uptrend. So there's still plenty of ways to play that. That also puts you right below the 200-day moving average. So again, if that risk profile kind of works for you, then this is an interesting one to play right now. Riding those moving averages higher, making the breakout, relative strength, all the stuff that we love. I just got to say the volatility on this thing is crazy. That said, if you're looking to catch one of those crazy Sprouts Farmers Market moves, I mean, that might be what you need to work
And that
through.
volatility isn't unusual for a smaller name like that. I mean, that's more what I think that's an acceptable risk if you're dipping your toe in kind of the small mid-cap space. You need to be prepared for that.
Right.
It's a great reminder, though, because what Stockcharts and any charting platform does, you always stretch out the price action to kind of fit the visual, right?
Yeah.
And that makes sense. Which means that very low volatility names like utilities, it almost exaggerates it. It makes it seem like they're more volatile. And then names like this, it compresses all of it. So it seems like it's less volatile. So that inspect tool you're using is super helpful to just check what is that price movement that I'm seeing here? What does that actually mean for my portfolio? It's super valuable. Yeah. It's interesting. So this is a name that's smaller than a lot of the ones we're talking. It's probably the smallest name we're going to throw out. What is there a lower threshold in terms of market cap or liquidity or something that you use to, just to make sure you're not getting into something a little too risky, or how do you think about the lower end?
So I like stuff that's above $1 billion.
Yeah.
Ideally, even higher.
Yeah.
When I start seeing gaps on the short-term chart, so this is now a super short-term 5-day chart.
Yeah.
So every bar on here is 1 minute. Every candle on here is 1 minute.
Yep.
And this is just the last 5 days of trading.
Yeah.
When you look at this, that's really spotty, right?
Yeah.
You're not getting a ton of trading in this name.
Yep.
There's a lot of minutes and even sometimes hours on this thing where it's not going to trade very much. Compare that to something like NVIDIA, where the 5 minute, the 1 minute 5-day chart looks pretty much exactly the same as a daily chart or a monthly chart. It's just constantly filled in. So those kinds of things where I start to see these spotty intraday charts, that starts to concern me. You see a lot more of that with a $1 billion company or a $500 million company than you do with a $500 billion company.
For sure.
You're not getting that with Coke.
Yep.
So yeah, a lower threshold for me. I like to steer clear of anything that's about below $1 billion. That said, that's just kind of my approach, and that's going to vary depending on what the size of your trades are, all of that stuff. There's so many different factors there.
Sure.
But yeah, I like stuff that just has more liquidity.
Yeah.
I don't ever want to be a volume bar on a chart. if you think about it that way, that's not going to make me.
You don't want
happy.
your trade to be reflected on the chart, moment to moment.
No,
that's a good minimum.
I'm probably not going to be a volume bar with NVIDIA, so I'm going to steer clear of.
I like it.
Yeah.
All right, my last pick here for the month end, kind of a different chart and certainly the outlier from a technical perspective, but I think an interesting story is Coinbase.
Yeah.
So Coinbase, I mean, and again, for me, what's interesting, and I do own Bitcoin and Ethereum. I have a Coinbase account, although I don't own the stock right now. What's interesting about Coinbase and cryptocurrencies in general, they're starting to diverge from equities, right?
Yeah.
So equities and cryptos like Bitcoin and Ethereum have tended to be very highly correlated here in 2024 going into this year, both kind of treated as risk assets. So when equity's struggling, cryptocurrency's struggling, what you've seen in the month of April, actually cryptocurrencies started to improve, especially as stocks were starting to rotate lower because they're not part of that tariff story. They're arguably above or outside of that. So, areas that are not going to be affected negatively all of a sudden become a pretty compelling story. So I think Coinbase is an interesting way if you're trying to just own stocks. Coinbase is a way to almost directly play the cryptocurrency space without owning, a digital wallet or something like that.
Yeah.
If there is a technical argument to be made, I would say the fact that it's finding clear support at the lows from last fall is really compelling.
Yep.
So with a lot of things, like when you start breaking through the 200-day, you start breaking support, I immediately look to the left to see where we're at relative to where we've been. That was a level we kind of keyed in on around 145, and as long as that holds, the chart's pretty encouraging. It held big time and then started to rotate higher. So for me, I would have an entry point sort of laid in at the 200-day moving average. I think getting above like 225 kind of completes that bullish rotation. I would also say on this rally, the RSI stalled out right now around 60. So I'd want to see that sort of continue higher and have more positive momentum because that's really what you would see in a recovery. You start to see the price breaking to new swing highs. You start to see the momentum improving and the RSI getting above 60. So I'm almost looking for a very similar pattern to what we saw in September, October, November of last year. When we finally broke above the 200-day, we did so on stronger momentum, and that ended up unlocking upside to make new all-time highs. So I think of it as kind of an if-then statement. If we can get above the 200-day on stronger momentum, I think that's a really good opportunity to trend higher.
Yeah.
So it's an interesting area. Again, I like looking for things now with all the uncertainty around tariffs. Look for things that are either immune from tariffs or just aren't part of that story. And this is one that tariffs aren't going to make or break Coinbase, most likely. Basically people speculating in the strength of cryptocurrencies, which is a bet I am making. I think it's an interesting way to do it with an equity.
Yeah. I really like this. I want to ask you too about sort of multi-time frame stuff.
Yeah.
Because right now I think Coinbase is a really interesting one to watch this month on a daily chart. Lots going on there, and I love that you're talking about the sort of theme with tariffs and how it's going to be impacted.
Yeah.
But when you step back also to, I don't know if you want to pull up like a longer term weekly chart.
Sure.
I mean, this thing is kind of still trying to figure out how to get above its IPO highs, right?
Yeah.
But it's getting close.
Yep.
We're running up in some levels that are pretty interesting to go back to from the initial launch of this thing as a public company.
Yes.
How important is that to you? How much are you sort of moving between these times?
No, it's a really good point. And especially when you have an IPO, right? It's hard at the beginning to really use technical analysis too much because you don't have a lot of data to work with, right? So you need enough. But once you do, and especially Coinbase, I sold off. I mean, it went into 2022, ended up being a really tough time to IPO because 2022, obviously pretty bad. It went down a ton, and it's slowly but steadily been regaining that. I would say from the non-technical perspective, think about what the world looks like today for cryptocurrencies versus during the IPO.
Yeah.
There are a lot of ways to have exposure to Bitcoin than you had before, right? You don't have to open a digital wallet. You buy an ETF that's pretty liquid. So I think the opportunity there, the institutional buy-in, which could provide the next big leg higher as a part of that as well. So, again, I think the most bullish thing you see here is breaking above that sort of initial IPO range would be such a win. It retested that at the end of that initial year in 2021. We essentially retested that in the fourth quarter of last year.
Yep.
So I think that would really validate the breakout and be a nice upswing. The other thing I'll tell you is with a chart like Coinbase, and this is happening with a lot of charts right now, we're so caught up with the day-to-day price action, we find ourselves looking at daily charts.
Right.
When in doubt, zoom out, right? So look at a weekly chart. Weekly PPO, I think, is a really good indicator to watch just to sort of be a quick gut check on, am I getting too excited about a short-term bounce, or is there enough of a rotation to really validate that?
Yeah.
And if you look at buy signals from the weekly PPO, that's when it really tends to confirm we're now really emerging in a position of strength. So it might be a little early on that, but this is why watching the weekly chart here can be pretty valuable too.
Yeah, that's a great indicator to bring in here.
Mm-hmm.
I think it's looking back, pretty terrible time to go public here for Coinbase. But with everything we've seen happen in the crypto space, and potentially an administration that's a little bit more crypto friendly now too.
Yep,
I mean, that's pretty interesting
Makes
one
a
to
difference.
watch. Okay, I'm going to do something kind of similar. I'm going to pull up Robinhood.
Ooh, okay, good.
Now, what's interesting is that Coinbase has been on my sort of long-term charts to watch, not to trade it off the daily, but invest in it for the longer term.
Yeah.
It's been on my long-term watch list for a little while. Hood also has as well. Robinhood has been on that same list. So I had a look at Coinbase, but Robinhood I think is a little bit more interesting to me because it brings in some of that crypto stuff. It also brings in this theme of younger investors getting involved in the market for a longer period of time and maybe looking for a more modern brokerage like that's not sort of one of the classics. So I think Robinhood is an interesting company for a lot of reasons. Also, kind of similar to Coinbase, just trying to get back above its kind of IPO highs, right? Trying to sort of figure out how to be a public company. If we zoom back to a longer term weekly chart, this is a 5-year weekly chart. So here's Robinhood doing a very similar thing to Coinbase. Went public, moved higher, terrible time to go public, got absolutely slammed, based for a while. Now it's kind of doing the Sprouts Farmers Market thing, based in that stage one, breaking out, and now trying to get back above those IPO highs, which is interesting. So this thing definitely catches my eye on a longer term chart as well. Mm-hmm. We have earnings today, and I don't know if that's before or after the close. We'll have to look that up. I assume that it's after the close here. So definitely a tricky one to watch at the current moment, but definitely one to watch for this month and beyond. Now, if we go back to the daily chart, which is really what catches my eye on this thing, really a beautiful opportunity if this thing can make a breakout. Again, we've got great relative strength coming out of this thing. Robinhood has absolutely been crushing the total market over the last year and a half. I like to see that strength out of Robinhood, especially coming off the weakness that we saw, when it initially went public.
Yeah.
I do like to see a lot of interest in this thing. It's not necessarily the volume profile that I'd like to see. I want to see more big volume on up days. But just the fact that we are seeing volume coming into this name, it tells me that there's interest in the stock, right? That's a very different picture than what we saw for TDG, where there was just no one showing up to move the stock around.
Yeah.
This is a very, very different profile here for Hood. Now, again, I got to go back to my horizontal lines because these almost look like they're at the same level to me. I mean, this thing is just crazy volatile. What I want to highlight again, we've been talking about this little inspect tool. You brought it up. I've been using it. You brought it up though. This little crosshair button, this black crosshair button at the top of the Sharp Charts workbench, make sure that you are using that. Anyone who is watching this video, make sure that you're using that. So helpful for measuring things on the fly. In this case, I cannot believe this. Here's from the highs, okay, before the market really started selling off, to the lows. That is a 56% drawdown for Robinhood. And that occurred in how many sessions do you think, Dave? 30?
Ooh, yeah, 30.
36 freaking sessions. I mean, that's
quick.
Very rapid drawdown for a 56% move to the downside. So now it did basically just bounce off the 200-day moving average. I mean, that's a thing of beauty. There's so much to like on this chart, but also so much for me to just go, wow, yeah, that thing is moving around. Again, you got to have some stones to trade this thing. So my 10% line, my 10% stop doesn't really get me that far. This is definitely something where you'd have to have a much wider band, probably at least a 25% stop on this thing.
Yep.
That does get you some meaty price action. And again, if you're interested in that long-term setup, breaking out above, hopefully, those IPO highs, then Robinhood makes a lot of sense to me. Brings in some of those thematic, things that we're talking about with millennials and younger generation, cryptos, all that stuff. But a bit of a wild chart. So I saved that one for last.
Thanks for that. We both sort of ended with some volatility there.
Yeah, we did.
You know, it's interesting though. You're showing with the Inspectable like a percent stop, which again is a really good. I think it's a really good starting point. And on any chart, start there. 100% agreed. What you're pointing out is what I encourage people to get to eventually with stops is to do volatility-based stops and not percentage-based stops, right? So if the data series is pretty wild, you need a lot more room to just accommodate the natural volatility you're going to have.
Yep.
And Stockcharts has some really good tools to help you quantify the average true range. You can show as an indicator, just see how much does this tend to move.
Yep.
The chandelier exit system is a really volatility average true range based system.
Yep.
Helps you just adapt for that, but normal noise has to be accommodated for in stops, and I think a chart like this is a great example of that.
Yeah, and I mean, just to touch on that a little bit. So I like to draw these levels just to kind of get an initial, understanding of between different names that are showing up across my watch list and things. But when you're actually figuring out these stops, I mean, you got to look at the chart, right? This is a great example. You can't just put on a trade and say 10% stop. You might get stopped out tomorrow. The thing might move 10% on you.
That's right.
You got to use the chart to actually figure out what are the levels that are going to make sense. Put those stops, if you got to trade Robinhood, you got to put that trade on. You just absolutely can't avoid it. You got to set those stops based on how the thing has actually been trading. Support and resistance for that name, all of that stuff. Go look back at different candles. I always like to look for what I call indecision candles. So times when you see these candles where, especially when you see sort of a wide swing on the day, but the open and the close are really, really close to each other, right?
Yep.
You got kind of an example of that right here. That to me is buyers and sellers saying, we don't really know. I don't know. We're kind of debating here. So when you see those levels, they become really interesting to me. So I always like to kind of look for those types of candles.
I like that.
Indecision candles.
I like that approach.
As I'm setting my stops. So. Man, 10 names to watch. I like the charts that we came up with.
As always, decent ideas.
Yeah. Final thoughts, last wisdom, anything that you're leaving us with? What do you got?
Good luck to everyone.
Good luck.
But hang in there, right? I mean, I think if there's anything I will tell you, I would argue we're still in a bearish environment, broadly speaking, although there's been a lot of short-term strength. I'm still not seeing enough to be wildly bullish. I don't think it's that clear to be wildly bullish.
Yeah.
And if there's good news about 2025, I have learned way more during bear markets than bull markets because in bull markets, you can get away with all sorts of bad habits.
You can.
In bear markets, risk controls matter.
Yeah.
Money management strategies matter. Having a bad stop loss strategy, that matters because it really hurts when you don't have one. So use this opportunity to grow as an investor, and Stockcharts obviously has a lot of great resources to help you do that.
Yeah, it's an interesting moment for me because I feel like, since the last show that we did, right?
Yeah.
We've gone through that initial phase where they sort of come for everything. We've gone through that initial phase where just absolutely every stock in the market gets hit.
Yeah.
Now we've bounced and we're in this point, like we've been saying, where you can find some good names.
Yep.
But the risk management side of all of this becomes incredibly important. Planning out those trades, understand why you're putting those trades on. If you don't have a good reason, don't just overtrade because you're bored. You got to be trading for the right reason. Yeah. There are good charts out there. There are good names out there, but you got to be careful. You got to use some of these tools that we're talking about. So,
agreed.
Yeah. Dave, I want to thank you for coming on the show today. Viewers, I want to thank you guys for joining us. It has been a blast to be with you here. Again, sharing great charts. As Dave says, it's always a good time to own good charts. So hopefully we've highlighted a few of them here for you today. Remember, if you liked this video, give it a like down below. That helps us out. Leave a comment. What are you watching? Let us know what charts have come across your screens, your radar, what is on your watch list for the next month. Also, don't forget, subscribe to the channel. We got more great content every single day, every single week. Always something happening here on Stockcharts TV and the Stockcharts.com website. We've got great authors like Mr. Dave Keller writing for us, doing great videos, helping us make sense of all those markets. So want to remind you, like and subscribe. And don't forget about those articles too, Stockcharts.com/articles. My name is Grayson Roze, Chief Strategist here at Stockcharts.com. You've been watching David Keller. Thank you so much. This has been a blast. We had some fun.
Always.
A lot of charts. Good things. We'll see you again soon for another one. Until then, remember, keep calm and chart on, my friends.